If you are 65 or older and on Social Security, there is a real chance that somewhere between $3,000 and $8,000 is leaving your household every single year for charges the law already says you don't owe.
Not a discount, not a rebate, not something you have to qualify for by jumping through hoops. Charges that are already exempted, already on the books, already eliminated for millions of people in your exact situation. And the money keeps going out anyway. 5 of them. 5 separate bills, and every single one of them shares the same ugly design. The system does not tell you. No letter arrives. No phone call comes. The exemption exists. It has your name on it, and it sits there unclaimed while the charge keeps hitting your account month after month. Now, one of these 5, I want you to hold on to this, is a single free form. 1 page, costs you nothing to file. And depending on your income bracket, it is worth up to $400 a month back off your Medicare premium. Most people who owe that surcharge think it is permanent. It is not. I will get there. Stay with me. Before the 5, one quick thing. The rules around Social Security and Medicare do not stay still. Income thresholds shift, new laws pass, deadlines open and close, and when any of that happens, no agency picks up the phone to warn you. The people who find out early are the ones who protect their money. Everyone else finds out months later, after the window closed and the check already cleared. If you would rather be in that first group, hit subscribe and turn on the bell. That is the entire reason this channel exists, to put this in front of you before it costs you something. All right, 5 bills, let's go. Number 1, start with the check itself. A significant number of seniors are having federal income tax pulled directly out of their Social Security every single month, and a large portion of them do not owe a penny of it. Here's how it works. The IRS looks at what they call your combined income. That is your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefit, added together. If you are single and that combined total comes in under $25,000 a year, your Social Security is not taxed. Not partially, not at a reduced rate. 0 federal tax on those benefits. Married and filing jointly, the line is $32,000. Come in under that as a couple, and you owe nothing on your Social Security income. So who is still paying? The person who set up voluntary tax withholding on their benefits years ago, maybe a decade ago, checked a box on a form and never went back to look at it again. Life changed. Income dropped. Social Security became the main source of money coming in. But the withholding kept running on autopilot, pulling money out of every check as if nothing had changed. Here is what makes this worse. Those 2 thresholds, the $25,000 and the $32,000, were written into law in the 1980s and have never once been adjusted for inflation. Not once in over 40 years. Which means every year, as the dollar shrinks, more seniors get pulled over those lines and into paying, even when their real purchasing power has gone nowhere but down. That is not an oversight. That is how it was designed. What do you do right now? Pull your most recent tax return. Look at whether federal tax is being withheld from your Social Security. Then look at your combined income. If you are coming in under $25,000 single or $32,000 married, you call Social Security and you say this: I want to stop federal tax withholding from my Social Security benefit. That is it. That single sentence stops the bleed. Money back in your check every month going forward. Number 2, and this one hits the most people the hardest. If you are on Medicare, you are paying a Part B premium. In 2026, that is $185.90 every month. And it does not show up as a separate bill you have to write a check for. It comes out of your Social Security payment before it ever lands in your account. Silent, automatic, month after month. Most people assume that charge is just part of being on Medicare. For millions of seniors, it is not. They qualify to have that premium paid in full, completely covered, and they are handing over $185.90 a month anyway. The programs that cover it are called Medicare savings programs. There are three that matter here: QMB, SLMB, and QI. Each one covers that Part B premium completely. And QMB, the strongest one, goes even further. It picks up your deductibles and your copays too. Here is roughly where the income lines sit in most states right now. If you are a single senior with monthly income under about $1,350, or a couple bringing in under about $1,824 combined per month, you are likely in range for the strongest program. The cutoffs climb higher for SLMB and QI, so even if those numbers sound close, you may still qualify. And several states do not count your savings account balance against you when they decide.
Let me tell you about someone. I will call her Margaret, 71 years old, widowed, living in Ohio on her late husband's Social Security and a small pension from the school district where she worked for 12 years. For 4 straight years, $185 came out of her check every month for Part B. She thought it was required. Nobody told her otherwise. A caseworker at her senior center ran her numbers in about 15 minutes and told her she had qualified for QMB the entire time. 4 years. Over $8,800 she never had to pay, gone. And she is not getting it back. The only thing between Margaret and that money was a form nobody ever handed her. Here is the number that should bother you. Roughly 1 in 4 seniors who qualify for these programs is not signed up. Not because they applied and got turned down, because they never knew to ask and nobody ever offered. And it does not stop at the premium. If your income is low enough for these programs, you also qualify for extra help on your prescriptions. In 2026, that caps what you pay for a covered drug at $12.65 per prescription, no matter what the sticker price says. Here is exactly what you do. Call Medicare directly. The number is 1-800-633-4227, and you say this exact sentence: I want to apply for a Medicare savings program. I believe I may qualify to have my Part B premium paid. Those words start the entire process. Write them down before this video ends.
3 more. And the next one, most people assume it either does not apply to them or already expired. It has not. It is active right now. It stacks on top of deductions you already take, and if you are married and both of you are 65 or older, it doubles. Do not move. Number 3, brand new, and it has an expiration date. This came out of the tax law signed in the summer of 2025. If you turn 65 by the last day of the tax year, you are allowed to knock an additional $6,000 off your taxable income. That is on top of your regular standard deduction, on top of the existing age add-on for being over 65. It stacks on both, and it expires in 2028. So this one is not someday. This is right now, on the return you are filing this year. Let me put real numbers on what that looks like. A single person over 65 takes the standard deduction, around $15,750 in 2026. Add the existing $2,000 age amount, then add this new $6,000. That is over $23,000 in deductions before a single dollar of tax gets calculated on your income. For a large portion of retirees living on Social Security and modest savings, that drops the tax bill to $0. Now the part for married couples where both of you are 65 or older. You do not split one deduction. You each get your own $6,000. That is $12,000 off your combined taxable income, on top of everything else you already take, simply for being a retired couple over 65. There is a limit, and I will not hide it. It starts to phase out once your income passes $75,000 as a single filer or $150,000 as a couple. Above those levels, it tapers and eventually disappears. But this was designed for middle-income retirees, and that is exactly who most seniors are.
Number 4, and this one reaches you even if your mortgage is paid off and your house has been yours free and clear for 20 years. Every state in this country offers some form of property tax relief for homeowners who are 65 and older. Some of them carve a fixed amount off your home's assessed value. Some freeze that assessed value the day you qualify, so your property tax bill stops climbing while your neighbor's keeps going up every year. A few states cap the tax as a percentage of your income, so it can never outrun what you bring in.
Texas gives seniors an additional exemption and freezes the school district portion of the bill, which is often the biggest slice. Florida allows long-term senior residents to knock up to $50,000 off their home's assessed value. New York has given local governments the power to reduce a qualifying senior's assessed value by up to 65%. In some counties, the relief is even larger. This section is especially for the long-haul homeowner, the person who has sat in the same house for 25 or 30 years and watched the tax bill triple while the income stayed flat. A freeze is the most powerful tool available to you because it stops the rising portion in place permanently from the day you qualify. But here is that same pattern again. Not one of these programs is automatic. Your county assessor already has your age on file. They will not use it to help you. You have to file for the exemption yourself, usually in the early months of the year. And in most places, if you miss that filing window, you lose the break for the entire year, with no exceptions and no second chance.
Even if your income runs a little high for the standard exemption, ask specifically about a freeze or a deferral, because some of those have no income cap at all. Here is what you do tonight. Not this week, tonight. Call your county assessor's office or go to their website and ask this exact question. What senior property tax exemptions, freezes, or credits do I qualify for? And what is the filing deadline? Then write that deadline on the calendar. Do not trust your memory with this. Your memory is exactly what they are counting on. Now, the one I promised you at the very start of this video. The single free form. One page, costs you nothing to file. The charge it eliminates is one most people have been told or have just assumed is locked in for the year. It is not. And depending on which bracket you are in, filing this form is worth anywhere from $70 to over $400 a month back off your Medicare premium. Here it is. Number 5. This one is called IRMAA. It stands for Income-Related Monthly Adjustment Amount. Plain English, it is a surcharge added on top of your standard Medicare Part B premium if your income climbs past a certain threshold. The line is $106,000 for a single filer, $212,000 for a married couple filing jointly. Cross those lines, and Medicare adds anywhere from $74 to over $443 a month on top of your standard premium, depending on how far over the threshold your income goes. Here is the trap that catches people who would never expect to be in this situation. Medicare does not look at your current income to set that surcharge. They look back 2 years. Your 2026 IRMAA surcharge is based on your 2024 tax return.
So think about what happened in 2024. Did you sell a house, cash out a portion of your IRA or 401k, take a one-time pension distribution? Did your spouse pass away and the household filing status changed from married to single, which cuts the threshold in half? Any one of those events can push a single year's income over the IRMAA threshold and lock in a surcharge for 12 straight months, even though your actual income right now is far below that line. And here is what most people do. They get the letter from Medicare showing the higher premium. They assume a number from the government is final, and they pay it every month for the entire year. They were one page away from stopping it. The form is called SSA 44. One page, no filing fee. You submit it to Social Security to report a life-changing event that caused your income to drop since that 2024 return, and Social Security uses your current lower income to recalculate the surcharge instead. Depending on your bracket, that recalculation is worth between $74 and over $443 every single month off your Medicare premium. Here is exactly what you do. Call Social Security at 1-800-772-1213 and say this: my income has dropped significantly since 2024 due to a life-changing event. I want to file Form SSA 44 to request a recalculation of my Medicare premium.
Before the action steps, one more thing, and it connects directly to everything we just covered. Every benefit we talked about today, the Medicare savings programs, the premium recalculation, the property tax relief, is exactly the kind of information scammers use as bait. They call with a friendly voice. There is a new senior benefit available. Money is waiting for you. All you have to do is verify your Social Security number. Or pay a small processing fee to release the funds. Or the darker version, your number has been flagged. There is a warrant. Press 1 now. And your caller ID might even flash the real Social Security Administration phone number because they spoof that too. So lock these in. The real Social Security Administration does not cold call you and ask for your Social Security number. The real Medicare does not ask for payment in gift cards. And the cost of living adjustment you hear about every fall, that is automatic. No form, no fee, no phone call required. Anyone who tells you otherwise is reaching for your wallet. If a call like that lands, here is your line. If this is real, put it in writing and mail it to me. I am hanging up and calling the agency myself. Then hang up.
Here are your 5 steps. Write these down. Step 1. Pull your most recent tax return and check whether federal tax is being withheld from your Social Security. If your combined income is under 1-800-633-4227 and ask about a Medicare savings program. Say, I want to apply for a Medicare savings program and have my Part B premium paid. Do this today. Step 3. If someone prepares your taxes, call them before you sign this year's return and ask, did you take the new $6,000 senior deduction or $12,000 for both of us? Make sure it is on Schedule 1A. Step 4. Call your county assessor's office and ask, what senior property tax exemptions or freezes do I qualify for and what is the deadline to file? Then put that deadline on the calendar tonight. Step 5. If a one-time income event in 2024, a home sale, an IRA withdrawal, a change in filing status, pushed your income over the IRMAA threshold. If this helped you today, hit subscribe. New information drops every week, and the rules around these programs change more often than anyone tells you. And do one thing right now before you move on. Think of one person, your sister, your neighbor, the friend from your church who has been quietly grumbling about her Medicare bill for 2 years, and send this video directly to them. One of these 5 could put real money back in their pocket before the year is out. That is worth a 30-second text message. I will see you in the next one.